to another daily recap. Today is Monday, start of the week, January 30th. And as you can see, this was my daily analysis, my price points of interest, but of course with the FOMC in focus from this Wednesday. So today the market was low, there is not much volume and it's not a clear sided bias. And then so as you can see here, the main movement was really nothing really happened. We just moved in a 100 pip range and we stayed mostly between 1923.5 and 1930, ending up a little bit up and down from this level, but mainly around 1923. So of course this is with the analysis, but we're going to of course remove it. So the analysis was mainly about looking for buys at 1923.5 or buys above 1933.2. As you can see here, we only had the opportunities of buys above this level. Also, we could have played some rejections from 1929, were not planned, but we're going to see here what actually I did also as a backtesting session. But let's start with, as you can see here, the price action doing London. This is London Open, and we can see that price was rejecting and staying above 1923.5. Of course, the price action is not clean, the volume is not one-sided, but of course, this in hindsight could have been the deeper pullback and then continuation bullish. So that's where I should have taken the trade here and taken the 15 pip loss. That's absolutely fine, because when then I see that the price is still reacting to this level from the previous days, from the previous week, 1921 is I think is mainly on a higher time frame bias. That's when the price still stays above, as you can see, retest the PPL. That's where I think I can extend this. As you can see here, even how it played out in the last few minutes. Here, that's when you see that the retest was just a deeper pullback and then breaks again above. And that's where I saw it and said, okay, let me virtually take it, backtest it. Yeah, give your trade a second chance. The trade idea is still valid. We're just deeply below and then we're breaking retest. Of course, if then we see strong rejections at this level, at these higher previous price sensitivity areas, then of course we can adjust and either avoid taking the full loss, taking the break even. But it's important to take the second one. And as you can see here, very slowly, because there's not much volume, price goes like 70 pips, but from this entry goes 45 pips as a scalp, 1 to 3. So you take one loss, -1 +3. So you are still up and profitable. And again, this is what I saw live. I think that's what I have the image of. As you can see here, of understanding that price can reject this level, and that's absolutely what happened. As you can see here, price then made its way back up into a new high. That would have been a 30 pip scalp, break above the 1929, still facing this huge price sensitivity area, price order block, and as you can see, rejecting it, getting rejected at it, showing that today there was not enough liquidity and volume for price to push above to even retest those previous highs. So that's where we see a strong rejection point, and I was not looking for sells at this level, but as per analysis, just let me, okay, this is not even 50%, it's more or less, it's more price action. And but as you can see here, we have this first rejection at the PSA. The confirmation is when we had the price digging below and then retesting 1929, break retest and continuation down. You can either take the retest or you can take the breakout of the candle, and that there's the one thing that is, I'm not saying weird, but that is different than usual, is that there is no retest of this PSA, not even a single candle that, as I would have expected, just straight going bearish. But I mean, the main bias is the buys. As you can see here, we're now getting into pre-New York hours, and what you see is not a double bottom because we are still in a descending. We're still making higher highs and higher lows. And what we see is that we stop probably at the next PPL. Yeah, we stop at the next PPL, then break and retest 1923.5 key level, which was the same trade idea. So again, just keeping in mind the same idea, that would have been another entry. Even from here, you see the break and retest of the level. That would have been awesome. Of course, it's a low volume day, so it's not really. I will not enjoy to stay in this trade as a scalper because there is no volume, so there is no scalp momentum. But again, what I saw live was exactly, let me show you. When the price was dropping below 1923.5, that's where I saw, okay, let's see, it will probably bounce either from this level, but as you can see here, this is from the PPL, bounce, and we can have two things. Either the one is that it pulls back, retests this area, and then goes back down, or either it breaks above, retests, and then continuation up. So that's where this arrow comes from. As you can see here, either the retest or the break and retest of this area, of these previous highs, and that's actually what happened. Break, retest, and that's where this entry was seen. As you can see, another 45 pips back up to the same level. You can see the size of the candle, how small they are, so you see that there's no volume today. We try to retest, but with no volume, we failed to make a new higher high. So that's where you have the another rejection. And as you can see here, this one was not seen live, but okay, price is slowly making a new lower low because we are breaking below here as an impulsive, and then we make a retest. We make a retest mostly of the key level 1929, but as well it's the retest of 75% retracement of this bearish move. Why should I take into consideration this bearish move? Is because it's coming from a liquidity pool and is making a new low. Of course, you're not guaranteed because yes, we're still probably, if I do like this, it's 75 pip retracement. Yeah, as you can see, it's a 75 pip retracement even on the bullish side. So you could have even taken this scalp back up for like 40 pips. So that's just up to you. And as you can see here, you could have taken either this sell for 45 pips, or if I cancel this and you just saw it, okay, the high time frame was still making bullish price action. That's exactly 75% retracement, and that's good for a quick bullish scalp, 45 pips again. But again, what I was looking like was that, okay, we are failing to make new higher highs, and we are retesting the key level on the dot. Look at the price action, look at the candle showing what are they showing you. They're showing you exactly exhaustion of buyers exactly at the key level, also as a PPL. So that's exactly what it is. So that's where you see exhaustion of the buyers and then continuation bearish. That's a 45 pips high risk high reward sell, as you can see here. And then of course then we got the retest of the key level. Still not much of a price action confirmation, but even if you entered here, then you would have been stopped out. That's because of low volume, low volatility. So that this entry would have been a loss. But again, you will take one loss, two losses, and if you take 3 wins, that's you have +9, 3, 6, 9, and -2. That's still a 7 profit, whatever the lot size it is. So this one would have been a loss. So let's put it like this. Yeah, anyway, okay, but still price action, you see how now it bounced back up from this level. And again, this one can be cancelled. So mainly the focus point of today was this pre-plan analysis, failure to make new highs, retest of key level, and also pre-planned price action. This one is the retest of the key level. This is 75% retracement and the retest of key level with candle confirmation. And this one would have been the loss of bounce from key level. And this one I want to put it in red. Also you. Okay, so that's basically what happened today. We have the bounce from level, so that would have been -1, that would have been a winning session. So I see you guys tomorrow for another daily analysis.